Hey traders, welcome back to the weekly Forex Forecast. Last week we had a number of data points that came out, and in today's video I'm going to show you why the data that came out last week sets up a number of opportunities very nicely this week. One of the currencies we're going to be looking at today is the US dollar to the upside, and we had a number of data points out last week which is supportive of this reversal taking place in the US dollar. There's a low and there's a higher low. And going into this week, what's noticeable is that all of this so far is one move. And I do think we're probably going to see a little bit of a sell-off in the dollar. And that sell-off, any sell-off next week, is going to provide the opportunity to step in and buy the US dollar versus other currencies, looking for a reversal higher next week. Okay, so in terms of market selection, looking at the leaderboard in the Hedge-Trading app, you can see the Canadian dollar and the New Zealand dollar are sitting at the top of the leaderboard of the majors here. And alongside that also is the pound. Those are the three individual currencies sitting in the positive side. However, there is some nuance to this going into next week. Why? Because the data that we had out last week, and we had this data coming out of a number of countries, but one of the countries was the US. We had a hotter than expected CPI print coming out of the US this week. And also we had PPI data on Friday coming out hotter than expected. Why is this significant? Because PPI data tends to lead CPI data in the future. And also it feeds into the PCE inflation data coming out later this month. And the PCE inflation data is what the Federal Reserve is looking at. It's its preferred gauge of inflation when setting monetary policy. So hotter than expected CPI and PPI tells us two things: that we are looking at potentially, at least near term, a re-acceleration of inflation. And this is feeding into the markets. We're starting to see an inflationary regime take over. Now, in inflationary regimes, what do we see? We see the US dollar tend to outperform alongside the commodity currencies, the Canadian dollar and the New Zealand dollar, and also the Aussie dollar. And the currencies which suffer the most tend to be the EU majors, the pound, the Swiss franc, the euro, and also the yen. So going into next week, based on what we've just discussed, yes, the British pound is in the positive side and the dollar is in the negative side, but they're both kind of neutral, and the US dollar performance metrics are getting stronger, whereas the pounds are getting weaker. It's showing momentum in this direction. So I would not be surprised to see the US dollar popping into the positive side over the coming weeks and the pound dropping into the negative side. Now, if that were to take place, we would have the Canadian dollar, the New Zealand dollar, and the US dollar, three currencies to the long side, which tend to outperform when you get inflation. And yes, the Australian dollar is in the negative side, but it is also getting stronger. So I'd rather just not sell this or buy this next week. Instead, I would prefer to focus on Canadian dollar, New Zealand dollar, and the US dollar to the long side, pairing that first and foremost with the yen. Now, we did have, after the close, statements from the Ministry of Finance in Japan talking about the raising of interest rates. How that's going to affect the yen going into next week, maybe we just see a pop and that's the opportunity to fade it. But unless or until the data shifts, I'm going to be looking at shorting the yen. Outside of that, I'm also going to be looking at euro to the short side. Again, EU major and the Swiss franc EU major to the short side versus the US dollar, the New Zealand dollar, and the Canadian dollar. Those are kind of inflationary regime setups that tend to outperform. Now, the other thing going into next week is you may be asking, those comments from the Ministry of Finance about raising interest rates are, all well and good, and they are technically bullish, for the currency. Ceteris paribus, all things remaining equal. However, what we also had out of Japan last week was data. We saw the machine tools orders coming out much worse than expected. And we also got a recessionary print in the GDP data. So Japan is in a recession. So it's all well and good, the Ministry of Finance coming out and talking about raising rates and exiting the negative interest rate regime. But it looks like the window of opportunity for now has passed, because Japan is in recession. And when an economy goes into recession, you don't really want to be raising interest rates right then. That is when you're forced to ease, and the release valve, will actually be the Japanese yen. So despite the fact we had the Ministry of Finance coming out and kind of talking up the yen, I do think any pop higher in the yen is probably still going to be worth fading next week. Now, the other thing to note is going into next week, the data out of the UK also show the UK going into recession alongside Japan. So it's a second reason why, if the UK is into recession, this is going to be negative for the pound. And also, it's another reason why going into next week, alongside what we're seeing here in the leaderboard with weakening performance metrics, it's another reason why I would rather not be long the pound, even though it's actually in the positive side of the scorecards. It's another reason why I'm choosing the dollar to the long side over the pound. And the final thing to take note of last week was the data out of Switzerland, which showed inflation coming out softer than expected. This actually gives the Swiss National Bank more leeway in their monetary policy, and it implies potentially easing, or at least relative to other countries, easing first. So that is actually a bearish driver for the Swiss franc, and that also supports this idea of CAD franc to the upside, New Zealand franc to the upside, and also US dollar franc to the upside next week. So alongside those three, also going to be looking at EurCad to the downside, CAD yen to the upside, Euro New Zealand to the downside, New Zealand yen to the upside, and alongside US dollar Swiss franc, we're going to be looking at Euro dollar to the downside and US dollar yen to the upside. Okay, so let's have a look at the markets themselves, starting with crude oil. Now, going into next week, I have a bullish bias on crude oil. It means I can either buy crude oil or do nothing. I cannot short crude oil next week. So what I want to see is I want to see crude oil pulling back. And ideally, if I have a bullish bias on this, I'd like to see this trading below the low and down below the 75.41. And once we trade below here, we have real-time market probabilities here, which are suggesting that we have a 70% chance of pausing or reversing if we start to trade below 75.41. So coming into next week, I have my initial bias, which is to the upside. I cannot sell this market. That means if we pull back and we test below the 75.41, this is going to be an area I'm going to be looking for a potential short-term buying opportunity for 1 or 2 days in crude oil next week. Alternatively, if we start to pull back, we may get the intra-week breakout. And for those of you trading intra-week, usually get one of these. It breaks up, pulls back, and then you get a follow-through into the upper bound of the 81.52. I prefer to look to fade these moves. These are the setups we go through in real time with members, but you can also take the breakouts intra-week if that is what your strategy adheres to. Okay, so the first thing we're going to look at is the CAD long theme. We're going to start off with CAD yen. This is a market that has broken out of this recent consolidation here. You can see we're kind of testing the highs, and then we break with momentum. And in fact, the high of this previous consolidation is sitting right at the 110.28. And sometimes I get asked, do I draw these levels on? These levels are automatically generated. It's one of the features of the Hedge-Trading app. And again, like I say, they provide a 70% chance of pausing or reversing if you test these levels. So an upper bound on a bullish market, I'm looking to book profits, and a lower bound, I'm looking to buy that. That's essentially a mispricing. I'm saying I want to be long. The market sells off. We're looking at that as a mispricing so we can buy into it for a day or two. So any pullback in this market next week, what I'm going to be looking for is a pullback, a retest of the high over here, and a breach of the 110.280. That is going to be the area I'm going to be looking for 1 or 2 day buying opportunity in CAD yen. And alternatively, again, if it's a very strong market, you may get the breakout intra-week like this with momentum. You can look for the pullback and look for the follow-through into the 112.45. This would be where I'd be booking profits if you get involved in this next week. Next is EurCad. Now, EurCad is slowly making its way down with lower highs and lower lows. However, you can see it's been very choppy recently. What I want to see is, because I can either be short this market or do nothing based on reasons discussed, I cannot buy this market next week. So what I want to see is I want to see this market pulling back and testing. There's a nice 4-hour high here. If we breach this and we test the 1.4631, anywhere in this area, I'm going to be looking and considering this as essentially being overbought on the week. And it's overbought in a market that I'm looking to be short. So that gives me the opportunity to step in and look for a day or two sell-off to the downside in this market. And again, for those of you who like intra-week breakouts and you've got strategies, any sell-off like this, any breakout in the direction of the original plan, which is to the short side, that can set up a nice pullback and a follow-through trade down to the prior low, and in this case onto the 1.4438, and that would be where I'd be looking to book profits on any intra-week trades in EurCad. And the final CAD pair we're going to look at is CAD franc. Now, CAD franc to the upside is a market that I really like. I can either buy it or do nothing. Cannot short this market next week. And why I like this is because we have that kind of dual catalyst. If we get a stronger crude oil and we are starting to see inflation coming back in, then this is going to be bullish for the Canadian dollar. We do have CPI coming out of Canada next week as well on Tuesday. Just bear that in mind. So you might not see the CAD pairs move until Tuesday. But what I'd like to see is I'd like to see this market pulling back perhaps on the CPI, retesting the prior high, and breaching the 0.6480. If we get down into this area, this is going to be a place I'm going to be looking at buying CAD franc for 1 or 2 days. Because think about this, we get a sell-off in the Canadian dollar versus the Swiss franc. However, going into next week, we have bullish catalyst for the Canadian dollar, and also with the Swiss franc, we have a bearish catalyst from last week with inflation coming out softer than expected. So any sell-off and a test of the 0.6480 is essentially viewed as a mispricing for us to step in and buy in the overall direction to the upside. Again, on Tuesday, Canadian CPI data is coming out, so the Canadian pairs could get very volatile, and that is likely going to affect the markets as well. So you can't trade the CAD pairs next week without taking into account the CPI data coming out on Tuesday. If we start to break out before we test the lower bound, maybe we sell off, and then on Tuesday we get a rally on the inflation data, that's the opportunity to look for a pullback intra-week and a trade into the 0.6583. Moving on to the New Zealand pairs, and something to note with the New Zealand pairs is not next week, but the following week we have an RBNZ interest rate decision. It means the New Zealand pairs are unlikely to find any significant direction over the next 2 weeks. And why I like that is because if we get a pullback in New Zealand yen, especially if we come back and test below the 91.06, and you can see there's a low right here, there's a prior high at the 90.98, and right in between there we have the lower bound here at the 91.06, where New Zealand yen becomes oversold on the week. So any pullback and a breach of this area, especially if we test the 90.98, this is going to be a great opportunity next week to start to look for a buy for 1 or 2 days in New Zealand yen. And alternatively, if we just flag and we start to break out intra-week with a rally, a pullback, you can look for a follow through into the upper bound of the 92.91. Next is Euro New Zealand. Now, as we start to see inflation picking up again, this helps Euro New Zealand to the downside. Now, I'm not saying it has to go down in a straight line. You know, if Euro New Zealand is doing this, then it's probably going to be doing this, right? So what I'm saying is, if I'm overall looking to be bearish on Euro New Zealand, which I am, especially if we're going to go an inflationary regime, this is going to be supportive of further downside in Euro New Zealand. What that means is, if I get a pullback and I start to see this strengthening, especially if we breach the 1.7744 or the 1.7744, that is the opportunity to step in if this market becomes overbought on the week and look for an intra-week reversal for 1 or 2 days to the short side. So that's why I'm going to be looking at shorting this market. And alternatively, if instead we start to pull back towards the upper bound, but we don't test it, we break out instead like this with momentum, you can look for that flag and a follow through down into the 1.7443. And the final New Zealand pair is New Zealand franc. You can see we broke out of this very, very choppy kind of almost ending diagonal pattern. We started to get momentum. We're trending to the upside, and we are lacking a little bit of momentum now testing the high. So I'd like to see this pulling back next week. And if we test the lower bound, we test, which is very nice, this prior low. We also have a high over here. So there's an area here between these high here and this low here where you can start to look for a bounce to the upside. So if we pull back and we breach the 0.5344, I'm going to be looking at a potential buying opportunity for 1 or 2 days as we get a kind of intra-week reversal in New Zealand franc. If we trade towards our lower bound but we don't test it and we break with momentum and we start the next leg up, you can look for the flag, and then that's the opportunity for a follow through into the 0.5445. Wrapping up the Forex pairs with the US dollar markets before moving on to the gold and silver markets. I do like this very much in the same way I like CAD yen. We have a prior high over here. We have this kind of channel which we broke out of. And because of that, we're starting to see this potential stair steps. You break the high, you pull back and you retest the high. But at the same time, the lower bound of the 148.66 is there. So any pullback and a retest of the prior high breaching the 148.66, this is going to be the place I'm going to be looking for a 1 or 2 day buying opportunity in US dollar yen. And if we start to channel very much like over here and we break out very much like this, intra-week, very often you get the pull back, you can look for that flag and then a rally into the 151.69. Next is euro dollar. Now I am looking for further declines in this market. I can either sell it or do nothing. But what's interesting is this market, all of this move down is one move. So I do think there's a very good chance we push higher. Going into next week, I'm going to be looking for potential shorts above the upper bound, especially if we breach it and we start to test this high, for example. This is going to be a great place to look for a selling opportunity in euro dollar next week. And of course, if we do break out before we test it, but again, on balance, I think we test the upper bound next week. But if we do break out, again, you can look for that flag and another sell-off down into the prior low in the 1.0695. And the final Forex market before moving on to gold and silver is US dollar franc. Again, we have this setup where we have this kind of pullback, retest of the high, and we could potentially test the lower bound at the same time. So we test the prior high, broken, resistance turns support, and we have 70% chance roughly of pausing or reversing on the week. So here's where I'm going to be looking for that intra-week reversal for 1 or 2 days if we come back and test the 0.87270. Alternatively, you can see very strong momentum to the upside. So if you get this continue into channel and you break out intra-week, you can look for the pullback and you can look for the follow through into the prior high and the 0.8883. I can either buy this or do nothing. I cannot sell this market next week. And this is a market with a fundamental divergence in the inflation outlook for the countries, right? We're seeing inflation come in softer than expected in Switzerland, so bearish for the Swiss franc, and hotter than expected in the US, bullish for the US dollar. Okay, so wrapping up the video with gold and silver, and I have a bearish bias overall on both gold and silver because I have a bullish bias in the dollar. If you remember back to the beginning of the video, I was showing you how it looks like we're going to pull back, test the lower bound in the dollar, and that is where we can kickstart the next leg higher. So if we're going to get that first, in other words, we're going to get a weakening of the dollar, and at the same time, we're going to see gold push higher. That's the opportunity, especially if we breach this high and the 20390 next week. That's the opportunity I'm going to be looking at to short gold for 1 or 2 days down. And alternatively, if we fail to get all the way up, maybe we get close and the dollar bounces from the lower bound shown at the beginning of the video, we could just see gold sell off like this, and then the pullback and any follow through to the downside in the prior low is going to be the other opportunity into the 1986.92. But I can either short this or do nothing. I cannot buy this market next week. Wrapping up the video with silver. Now, silver is showing more strength than gold, and that's why I prefer gold as a short. And to be honest with you, I don't think silver is a fantastic short. On balance, I do have a very bearish bias on it because of the dollar. However, you could probably use this as a plan B. So what I prefer to see is I'd prefer to see further upside. And as the US dollar tests its lower bound, if we can get a test of the upper bound, this would be an area I'd potentially looking at shorting silver for 1 or 2 days. However, instead of trading this intra-week, the other way you could play this is if the dollar continues higher and it tests its upper bound, if silver comes back and you test the lower bound here, you could look at this as a potential range trade either side. So you could step in and look for 1 or 2 days up. As the US dollar sells off from its upper bound, you could look for that bounce in silver. So on balance, you could probably trade this both ways. I would rather short gold given the opportunity than silver because silver is showing some relative strength versus gold next week. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com.